Hello everyone, introducing a new service from the Chart Guys separate from our membership that gives you access to the chat room and our live stream community. This is a swing report newsletter that goes out on a weekly basis, and it's in direct response to all those people that messaged us and said, hey, I love your stuff, but with work and with family, I don't have enough time to put into the chat room to make it worth it to me. Well, this is now a service that's going to be sent out to your email via PDF and eventually put onto a website. And I'm going to go through this video and describe a little bit about what's going to be in these reports and how they can be utilized for profit. So many of you already know Chart Gal Lori. She's been putting out some of the futures videos on our YouTube channel recently. For those of you that don't know her, she's been a member of the Chart Guys for years. Very quickly, she showed us she had the entrepreneurial drive and motivation to put in the time and effort needed to learn technical analysis and apply it to her trading, which has certainly improved many times over the last few years with some very impressive results. So she has been working on this swing report for a dozen hours every weekend for months at this point, and we've been testing it within the Chart Guys community and taking feedback and changing the layout and the design, and very impressed with the results so far as the trades that have been triggered as a result of her specified levels. So let's break down what this swing trade report entails and how to best utilize it from here. So the swing report has 5 components to it, and it's a melding of fundamentals and technicals. The week in review, where we go over the past week and what has happened. We have the market wins, where we're looking at the S&P 500, the Dow, the Russell 2000, and checking in on the bigger picture perspective. We then have these SPDR Sectors, where we're looking at where money is flowing. Are we seeing sector rotation going on? Which sectors are strengthening? Which are weakening? Trade opportunities, where we highlight different zones for buys and sell targets, as well as stop levels on when to exit trades. And then trades in action, where we look back at previous trades that have triggered and essentially give a check-in on how they are playing out. The Week in Review section is an editorial in written format that provides context of the past week. We look to analyze the economic activity and its impact on stocks, certainly keeping an eye on the Fed and what they're doing, which has had a major impact recently. And with all the headlines, we've got COVID. What's the market paying attention to? What headlines should we ignore? What's the most important aspect of what is impacting stock movements? The Market Wins section is in video format, and it's an overall view of the technical analysis of the S&P 500, the Dow, and the Russell 2000. We look at the weekly, daily, 4-hour time frame, highlight any patterns that are setting up, because we certainly want to be trading with the trend and with where momentum is headed for the individual trades with what the broader market is doing. So the technicals that are going to be utilized in the swing report, Lori prefers the 8 and 21 exponential moving average because they are found in the Fibonacci sequence. She also uses Fibonacci levels in her targets and her stop levels on these swing trades. Certainly volume, RSI, different patterns. We know the head and shoulders, inverse head and shoulders, rising wedge, falling wedge, all of those that help us identify patterns and determine what are most likely scenarios. The Sector SPDR section will be in video format, and it will be going over the relative rotation graphs, which were new to me before this report, but it's a great way to visualize these sectors that are leading, that are lagging, who's strengthening, who's weakening, and that determines where our focus lies into the coming week. And after we find and identify the top 3 leading sectors, we then break down the technical analysis of those sectors a little bit more in depth. For the trade opportunities section, we're going to utilize what we call FunTech, which is fundamentals and technicals in combination. We've talked before about the spectrum, where it's not ideal to be 100% technical or 100% fundamental. There's many different places on this spectrum that traders can fall and still certainly be profitable. We don't want to have tunnel vision and completely disregard one of the very important aspects of trading, whether it is fundamental or technical. The Chart Guys have always had a goal of teaching people to fish and teaching people technical analysis. That's been goal number 1, teach people technical analysis. With the swing report, we've got enough feedback. We realize, okay, not everybody can do that. It takes a ton of time. People don't have lifestyles that are malleable enough to all of a sudden become traders with tens of thousands of hours to put into this. So the goal of the swing report is to save you time and do a lot of the work for you, and of course, make you money. That's our 2 goals: save time, make money. So to identify the setups that we're looking for, we utilize a bunch of the different stock screeners as well. We're going to use FinViz and Thinkorswim screener and the IBD names to find the best setups with the best risk to reward scenarios. Breaking it down a little bit further, the trade opportunities are going to be identifying 3 to 6 individual names to go either long or short, depending on what the market environment is giving us, and those trades are going to be in play for a few weeks. We give zones rather than individual levels, and we feel that that allows for individuals to have flexibility. Let's say if I want to be really aggressive and a buy zone given is $84 to $82, then I'm going to be scaling in right when 84 hits, and I'm going to do it very quickly. If I want to be a more conservative trader, maybe I have one order at 84, I have another order down at the lower end of the zone to be a little bit more cautious. The targets are going to be given on where we want to take profit. So using Fibonacci, let's just say the all-time high is $100. A target may be 127 based on the 1.27 extension of the Fibonacci sequence. And of course, if targets are not realized, we want to have an exit plan, and we'll have a stop out zone for when that trade is no longer viable if those targets are not reached. So this is one of the more important slides of the presentation, and it's position size. Lori likes to say position size, position size, position size, which is like location, location, location in real estate. It's one of the most important aspects of things. We'll have people in the chat room who are constantly asking about the same name over and over. That tells us that they are probably overexposed. They have too large a position and they're not comfortable. The goal with these swing trades is to be very relaxed and comfortable. We want to make our entry and then just let the levels play out. If it hits the stop level, I will exit. If it hits the sell level, I will exit. And there's no sitting on the edge of our seat and biting our fingernails watching every single tick of these names, which is, the ideal here. We want it to be a bit more passive with how we are trading this market. So in long names, when we're in a bull market, we want to have a little bit more exposure. Maybe 3 to 5% is what we're looking to recommend. And if it's in a sideways, uncertain market or in a bear market, 2 to 3% as the trend is not in our favor as much. And of course, it's the opposite. If we are in a short name, we want to be a bit more aggressive in a bear market and a bit more conservative in a bull market. Again, the goal is to remain very relaxed. And of course, we're going to have constant movement going on where if there's 6 picks given in a week, you don't have to take all 6 positions. You can cherry pick the different names that have your ideal style. We have some names that are blue sky breakout, like DOCU has been one of the names on this swing report, and it is very volatile and sees a lot of movement. If you want something that's more slow and steady, there'll be names that are more ideal for that. So getting position size down and not being too heavily into any individual name will allow for the swing report to work its magic, in a sense, allow you to have the longer term law of averages where you're not, going all in on one pick, and if it's not a winning pick, you're out of luck. You're going to be looking to get in lots of names over a long period of time and let the levels play out. In this slide, we need to highlight the importance of scaling in and out. We're not going to anticipate nailing tops and bottoms, and as a trader, I never anticipate nailing tops and bottoms. That's why we're giving zones to allow for scaling in. We don't want to be entering the entirety of a position all at once. And we've talked before how scaling in can be very detrimental to traders. That's only when it's not part of the game plan. If I'm in a position that's going red and I say, oh, well, I'm going to average down now, and that wasn't ever part of the plan, that's a huge red flag. But if the plan has always been, okay, 1/3 here, 1/3 here, 1/3 here, and then my stop level, if it drops down to this point, that's a very different setup. So that's what we recommend, scaling into 3 positions and then scaling out into strength on the way up. We don't want to exit the position and not utilize all of the follow through that the trade may end up accruing. So scaling in and out is very important, and as for a day trader, for me, it was a game changer in terms of allowing me comfort and increasing my win percentage because of the amount of flexibility that it gave me. So we can utilize bracket orders or conditional orders. If I'm at a job all day and I can't be watching the market, then I set an order. If this level is hit, I buy the position. If this order fills, then a stop level is set and a target order is then set. So there are ways to automate this to have very little to do. Likewise, if you are a swing and day trader, a sway trader, then you can get a little bit more precision. You can be a little bit more active and determine your entries and exits based on perhaps shorter term timeframes that you are more comfortable with. But for the most part, this will be designed for swing traders to allow those that want the hands-off approach the ability to profit in any market environment. The trades in action section will be in written format, and it will go over the symbol. Was the buy triggered? Was the stop triggered? Was the target triggered? And the different zones as far as what the price action did in those zones, and just a review of how the trades are playing out. So we will provide a link in the description of this video that will go over an example of a previous week's swing trade report so you can see how the layout of all this is organized. And finally, we've got the report summary, which of course summarizes the previous information given in the report and also looks ahead to ensure that we're keeping tabs on any events that could lead to significant volatility. We don't just want to wake up and one Wednesday afternoon say, why is the market going insane right now? We want to say, oh yeah, the Fed report was this week, or non-farm payrolls, or whatever the economic event may be. So that concludes the explanation of the Chart Guys weekly swing report subscription. There will be a link in the top of the comments in this video leading you to this page where you can click on sample and enter your email and get a sample of a previous newsletter sent to you to check it out. And of course the subscribe button if you are interested, $6.99 a year, and you can also pay for a single month to try it out. And after your month trial is up, if you don't cancel, you'll be automatically moved to the annual subscription. Thanks for your attention. See you around.